and Steve is here. So welcome back, Slim.
Be
How
back.
are you?
Good,
Yeah,
good.
well,
Thank you.
welcome
I've
back.
been
How are
been
you?
been tuning in. Been great. Been great. Been tuning in, listening to all your banter. So interesting.
Okay.
Love it.
I find your work really top drawer.
Well,
So
appreciate that.
I haven't
Appreciate
caught
that.
any YouTube videos in a while, but I'm very interested in what you're thinking going into October in multiple markets. Where do you want to start, Steve?
Well, why don't we start with where you guys left off, just
The
so that
dollar?
with the dollar, because that seems to be where you're really focused right now. You should see my dollar charts right now. Make sure that
Okay,
got them.
got him.
Good. Okay. So again, for a lot of people that are brand new to my work, my team and I are cycle analysts, and we essentially look at market rhythms, the money flows in the market, and look for repeating money coming in, money coming out, and we learn a lot from multiple time frames, looking at intraday charts, but specifically focused on daily, weekly, and some monthly charts to get an understanding of how money flows. The longer term holders are the ones that kind of really hold into positions. Those are monthly charts, and we get into intermediate and then daily, the daily being the much shorter term holders. So we get a lot of messages out of that. These half circles on the bottom that you see right in here, those are called cycle brackets. And those are just a drawing tool, and they help us understand the rhythms in the market, those money flows. Let's get to the dollar analysis in here, because you guys were talking bearish on the dollar and looking at 99.50 as some important number. And yes, I can corroborate that for you, because everybody's looking at that number way back over
Yeah.
here at that low in July of 23. At that number there, it broke this cycle bottom right over there. And now, again, we're looking at the cycle rhythms and the timing. And if you look at these cycles in here, you could see it just blows you away with how perfect the timing is in here. Rising phases, peaking at resistance, declining phases. This was a very beautiful, positive translation in this chart right here. Let me blow that up. But then when it rallied, it failed at that high and came
Yeah.
down and broke that low. Once it
Yeah.
broke that
That
low,
was
it
it.
told me it had all of this time to fall. And we were very bearish. And our momentum indicator, which is our reversal scout, turned over right there. And you can see it's been negative that whole way on the downside. Now, what this points to is that if it were to make its trough in here in the cycle in what is the average period, the distance from one trough to the next, that takes you out into November. So essentially, we're looking for the potential for decline out into November with that 99.50 number that everybody's looking at. But there's a major 61.8% here at 98.86, which to me is also a reasonable downside target. So that says to me that during this period in here, any rallies are likely to fail. If I move over to the daily chart, we can look at those rhythms in there, and you could see
Yeah, we're
beautiful
due for a low.
harmonics that are in there. And right now, either this minor third or this minor half is going to give us an area to bounce from. And I heard you talking about, if the dollar is down, you buy everything else. The dollar's up, you sell everything else. And that kind of makes sense. That correlation is not perfect, but it does make sense. Look at here at our what's called the slim ribbon PO, where it gives you all those negative resumption signals and is red. Perfect in there, really got great information from that, and it is still red. So in here, we're looking for somewhat of a feeble bounce, but probably from mid-October out into maybe even the election time is when I see a potential bounce in here in the dollar, but
Yeah.
then it is likely to continue to the downside after that. If you look at the cycle dates in here, on the daily chart, it says that that rhythm, in other words, the selling phase in that would end around the mid-November period. And I
After
go
the
back,
election, Steve. So,
yep, and I go back
so
here, and this is
yeah,
mid-November also on the weekly
yeah,
chart. So that
yeah,
side by side says we get a rally sometime into towards the election,
yeah.
but not a major rally because these formations won't allow for that. And then another move to the downside for the dollar into mid November, late November period. One more thing I really want to show you that I think is important because you guys focus on the dollar all of the time. I'm going to blow this chart up. This is a monthly chart in the dollar. And this is, I usually don't show this on these, but this is so spectacular. I really want you to see this. Over here is where it looks like on the monthly chart, here's November, December, where there's a trough. And then coming out into 2025, a period of rebound for the dollar. But this is a very negative overall pattern. And that calls for a decline in the dollar of great significance all the way out into late 2026. You can see each of these yellow zones is where there are significant downside moves. Absolutely perfect. And there's one of those coming out here in 2025, 2026. And that tells you that this whole period now of de-dollarization, which a lot of people say, that's baloney. The BRICS can't organize. There's no way that they can do that. But they are doing it. And de-dollarization, I think, is real. And this chart shows that to you. So we're in for a long, long
also,
period.
Steve, the Trump administration already is talking the dollar down if they get in, because they want exports to occur. So I know you're technical, but could that come into play with all the tariffs and everything?
Well, it certainly could be, but you're making an assumption on a Trump win that is built into these charts. And I'm not going to get political here. I don't like either candidate. So in this case, maybe it's telling you that. But remember, there's a whole period in here where the dollar could rally of some significance. It could get all the way up to 103-ish or more. And there's a period of some kind of potential rally in there for the dollar. That also would be a period where probably the gold market starts to correct, though I've been very bullish on gold, and I remain very bullish on gold over the very long term.
Okay. All right. Great look. Thank you for fine tuning some dates. So dollar down until early October, and then a recovery.
Then a recovery, correct. And it might make 99.5 before that. It might not. It doesn't really have to. I mean, it's already in a negative trend and could, get close to that, just under 100, test par,
Take out big round numbers or emotional levels.
Yep.
Yeah.
Right.
Okay. So let's take a look at S&P, Steve, because everyone's trying to pick a number. And I say, why pick a number? We'll see it when it happens.
Well,
but
let's start out by me saying that I was a bull for this year, but no way did I expect the market to make it up over 5,700. Actually, at the beginning of the year, I said it was, my outside was around 5,100. So my timing has been great, but the magnitude of the advance I've missed. So but our cycle patterns and what we look at are really what help us with the timing. So I'm going to blow up this weekly chart for you to see in here. And you can see that what we're looking at, and look at these magnificent rhythms in here. I'll take it from the bear market low right there through this whole bull market. And you can see those cyclical rhythms in there. They're beautiful. And each one of those yellow zones is where you get into the corrective. We call that the periods of risk. And these vertical lines show you where the actual low was, and these cycles show you on the bottom, these cycle brackets show you where the average lengths would be. Right now, we're moving up into what I think is a significant period of risk where there can be a very sharp decline in the market. Now, it could stop in these minor supports. Maybe we only get down to 54 and a quarter. 300 points is only a 6% decline. That would be, this one over here was 5.9%. So, I mean, that could happen 6%. It could happen where it's 12% and get all the way down to the monthly 23, which is under 5,200. So the next 6 weeks or so are a period of very high risk. We're in that window but there's no sign of a peak yet. You can see in here where our reversal scout turned up, it's bullish momentum here on the weekly chart. If I switch over to the daily chart, this has on there what we call our slim cloud that we project using these channels in here. And you can see it's moving way up in the top channel there with an upside potential before it peaks here at 58, 58.30, right in that range. So it's in this rising phase. This is the slim ribbon, which is a free indicator that shows you momentum. And the slim ribbon PO is a proprietary indicator, and that's green down over here. So this is all positive looking at the daily. It's looking for a corrective period out over here into somewhere around the first to second week of October, and then one more move up, as you can see, into October before that period of risk takes over. So depending on the depth of any kind of a pullback we get in here and the rise in here will help us understand the condition. But I have a lot of confidence in the timing, because you could see the timing in these cyclical patterns has been absolutely outstanding. So we're looking for the market to begin to stall over here, get a correction into sometime early October, another rally over here into early to mid-October, and then from mid-October to mid-November, a sizable decline. And that aligns with what we just talked about in the dollar, if you remember, where we think there's going to be a dollar rebound during that period. And that's also going to align with a gold corrective phase at that time also. So the correlations are holding up really well based on all of the different markets that we look at.
So we're close to some corrective moves on the dollar to the upside and the market and gold to the downside.
That's correct.
Steve, is it always going to be one market where everything goes up together and everything goes down together? I can remember days when there was differentiation between asset classes. Is it going to continue to be basically all one market? The only difference is magnitude of the moves, but pretty much they're all going up and down together.
Yeah, and I think that's the case. I mean, the correlations that I look at have held up for a very long period of time. And you have to really wonder if it's not government invasiveness that kind of makes it all one market. Because when you look at the amount of stimulus that's been put in to our economy or to world economies through massive deficit spending and the amount of debt that's been accumulated, that really makes things really very well connected regarding flows of money. So we get into liquidation stages, which we've seen for quite a while, affects all markets. And that's right. If the stock market's falling and people who are at record levels of margin debt have to then begin to liquidate, well, they liquidate everything. They don't really have a choice. They've got to raise money.
I saw a chart that margin debt is nowhere as high as it was before 2023.
Well, that's correct. Margin debt is nowhere as high as it is. However, net reserves in brokerage accounts is at a record low. So those are kind of two different numbers that I look at. So there's not a lot of money left to invest in brokerage accounts. They're really at record low cash positions. So, and they're chasing this market. Let's look at gold real quick, because I think it's so important, because it's in line with what we're talking about. I've been very, very bullish in gold, and I made a wild call that in one of the bear markets coming up for the stock market, the price of gold and the price of the S&P 500 would cross, probably well into the 3,000s. So I'm very bullish in the gold market. And it's now gotten into a period of very heavy resistance, as you can see right over here. Monthly fib extension here, a weekly fib extension here, a daily fib extension here. Those are all lining up to this area between, my target was 26.66, so it's gotten through there up to this level right over here at about 27.10. This is where I think it's going to stall. And that period of stock market liquidation, you can see, really aligns well with this, which takes you out into mid-November. This is where I think it's a load the boat on gold right over there, assuming that this analysis plays out correctly. Then I think after that, we get to move up here, those fib extensions and those targets based on this big dominant cycle coming across. So this is the minor cycle, and look how silver comes down and corrects with it also very nicely. And then these rising phases right over here could very well get you up into 28, 2900s right there in the gold market, which takes you out into early 2025. So that's a very bullish outlook. And when you get this type of a cycle, we call this a right-hand translation where the peak comes on the right side. It only leaves a little time for correction. You can see this one over here actually was triangular because the upside pressures were so strong. So it
Just
didn't allow
sideways.
for us,
Yeah.
it only was a sideways correction. You could get something like that in here, but I really think a pullback to just above 2,500 or to somewhere around 2,500 right here is where that's going to give the support. And that being a major buying opportunity. I've been very bullish on the gold miners, also silver miners, especially the juniors. I think leverage and the earnings is fantastic for them. So in this pullback, it's kind of, I think, load the boat. If it does come that way. If I look at the daily chart right over here, you can see that this is a minor pullback we're looking for in the next week, and then rising to that period out over here for that peak before you get into this corrective period out over here in the gold market. So nice timing alignments in there, and what really looks to me like a buying opportunity coming up in an exceptionally strong market.
Okay. After this correction in November, do you think that we're putting in all-time highs in the S&Ps, and this is just another, July type of scenario, and then we
Well,
go again?
I actually, here, I'm going to put the monthly up again. You're getting a treat to some of the charts that are really for my members. This is the monthly chart in the S&P 500. And you can see that based on the minor corrective period in here, that this period that we're in right now, we're expecting that correction is only likely to be brief.
Yeah.
And the next rally up over here is likely to get you up into that area somewhere between the peak that we make in here around 5,800, if that happens, to maybe as high as the mid to high 5,800s, or this number right over here,
6,000?
5960 is where that comes in. I really have doubts about it being able to get there. The problem is that we are right now at about a 200% market cap to GDP. We're at historic levels in valuation. Only the amount of stimulus that we've had around in the world can make this happen. And I think this is a massive bubble. And I've talked about the fact that a secular bear market was forming. We're getting into that kind of a peak. And I think we're in for a massive, many, many years of corrective periods that look a lot like the 1970s, where the
We're in a
overvaluation
range
corrects.
forever.
Yeah, it was basically a 40-something% range that we saw, and it lasted from really 1968 out to 1982.
That's right. August 82 was the
That's
low.
correct. I remember that. I was trading it, and I know you were too. If you go back and look at the big patterns, this looks like 68, the bear market, and out to 1970, the rally up into 72, and then the bear market that comes out down to 75. This almost
Interesting
perfectly
analog.
matches that. So it's that's where I think we're going. That we're in an everything bubble right now, and the markets could only be at this price level because of the massive stimulation we've seen that gives you something as ridiculous as NFTs and 20,000 different altcoins and all that. There's so many
Don't
ways
you
that
own,
you could
well,
see
what
the
about a blue chip stock like Children's Play or
Children's
Children's
Place. Is
Place?
it?
They're bankrupt,
I know.
right?
I've
It
no
just
idea.
tripled. It just
Yeah.
tripled.
Yeah,
Anyway,
no idea, no idea. And I
okay.
can tell you that one of my money managers has that long for me in a investment account. So go
Okay.
figure.
Anyway, yeah, don't look at your statements.
Yeah.
Uh, Steve, I'm a fan. And so you've been coming here for a while. I appreciate it, and I think you've developed fans here. But for new people that are here that want to follow your work and get involved with you, besides X at Ask Slim, where should they go?
Well, they should go to my website. Let's just pull that up right over here. This, by the way, is our ranking system, which is all of our algorithms built into that. And if I just go to AskSlim.com, this should come up in a second. And there's our site, AskSlim.com. And you can get all the information. Right now, we're running a special on level 3 where you get 35% off. It's just a massive amount of content, all of our algorithms in our applications, our Discord page, lots of support from our team. We have 4 incredible cycle analysts that are on our team, and you'll be able to get a great idea. You get our cycle low timing tracker, which is a great app that we do. And these are our memberships that you can see right here that we encourage you to join, all the way from being a day trader to being able to look at investment type time frames if you're a longer term holder. Our charts hubs have just fantastic ways to see all of the charts that I've shown you that are in there and placed in there for you to see. Level 4 members get our live charts, and we have great testimonials on there. So this is
Let's see that picture of
AskSlim.com.
you working there. Okay, there's
That
Slim
picture
doing.
right there is me in 1974 on the
Yeah.
top. That's me with my hands up screaming in the
Oh
original
yeah, I see you.
CBOE floor right
Yeah,
over here.
yeah,
And so that's me. 50 years ago, I became a member in May of 1974. This is
yeah.
me in the 80s doing my cycle charts on paper because, of course, we didn't have computer yet. So you could see the look after I'm spending hours putting the lines onto the paper charts right over there.
Yeah.
So
What I think that those charts were CRB charts.
those charts, I had CRB in there, but these charts, I had 32 different
Commodity
symbols that I did by
perspective.
hand.
Commodity perspective. Did you
Yeah.
use that one too?
This
Yeah.
big one over here. Yes, yes.
Yeah.
That's their 100-year chart.
Oh my gosh. All right. So there you go. That's a classic picture. Um, I don't know what an NFT is, but that'd be a good one.
An NFT?
Yeah. Make that
Oh,
into an NFT, like,
oh.
Melania. I
I
mean, before the top,
I could probably do that. Yes, but I don't know.
anyway, before the top in the market and people are still throwing money around.
Yeah.
Yeah, so 25 is the year of reckoning, Steve, huh?
25, I think it makes the peak, and then I think that there's a very major setback in the markets, all the markets, and a big liquidation phase.
Yeah.
So, and
Okay.
that very well may come by either of these presidential policies, because either of them can bring a disaster in this economy.
Yeah.
So,
I heard, here's the metaphor I heard. When you're flying into a mountain, does it matter if you hit the left or the right side?
yes, that is
Steve?
a sad but true metaphor.
Thank you, my brother.
Glad to be here.
My trading warrior brother, Steve Miller.
All
Follow
right.
the guy. Great
Thanks a
work,
lot.
Steve.
All right. Thank you. We'll see
Thank
you
you,
again.
buddy.
Okay. Bye-bye.
All right, so that's a wrap, everyone. You could join the team on the morning edge in 20 minutes. And thanks for hanging out. And don't just count your pips, count your blessings. Hi, Scott. Do you have my phone number? I want to talk to you. All right. Adam, you're welcome. I'll see you guys. You're welcome, Hugo. Okay. And that's a wrap, everyone. Good hunting. I'll see you tomorrow. What's today? Wednesday. See you tomorrow. Good luck. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.